Hello everyone, this is Nader, and today what I will do, I will give you a magic trick that if you use it, you will be able to book any journal entry in just 10 seconds. So go through this video with me and I will explain point by point how to book any journal entry in just 10 seconds. So first of all, I will assume that you know what is the balance sheet and what is the income statement, what is the component of the balance sheet and income statement. So for example, for the balance sheet, we have the assets, liability, equity. For income statement, we have expenses and we have income. So what we will do in this table, we will put in the debt side, we will put the assets, expenses, and on the credit side, we will put liability, equity, and income. And I will explain why we will do this. So if we want to increase the assets or the expenses, for example, we buy new equipment, this equipment will increase the asset side. So we will put this as debt or in the debt, not in the credit. And if we want to decrease the assets or the expenses, we will put it in the credit side. In the liability, equity, and income, we already put it in the credit side. So if we want to increase any account, liability, equity, or income, we want to increase it, we will put it in the credit side. And if we want to decrease it, we will put in the debt side, not the credit side. So by master this table, you will be able to book any journal entry now. Again, in the debit side, we will put the assets and expenses. If you want to increase it in the journal entry, you will put it in the debit side. If you want to decrease it, you will put it in the credit side. On the other hand, on the credit table, you will put liability, income, and equity. If you want to increase any of these accounts, you will put them in the credit in the journal entry. And if you want to decrease it, you will put it in the debit side. So by doing this, you will be able to book any journal entry in just 10 seconds. So let's just take a couple of examples to show you how we can implement what we learn now and how we can book any journal entry. So for example, we buy equity for cash. I know that the equity is assets, and I know also that the cash is assets. When we buy equity, we increase the equity side, but we pay this one through cash, so we need to decrease cash. So if we want to increase the equity, we will put it in the debit side. So we will make debit equity for 5,000 and credit cash for 5,000 because we decrease the cash and increase the equity. Let's see example 2. You provide a service on account, whatever the service that you provide, and you didn't get cash, but you put it on account, on a credit. So what will increase here? You didn't take cash, but you make invoice and you will get this cash maybe after 10 days, 20 days, 30 days. So it's account receivable. Account receivable, I know that it's a current assets. So if I want to increase the current assets or the account receivable, I will put it in the debit side. So I will put debit account receivable for 2,000. Okay, what will be the credit side? What did I do now? I provide service. So it's income, it's revenue. And if I want to increase the income, I will put it on the credit side. So in the journal entry, I will put credit service revenue for 2,000. Let's take example 3. You pay rent for cash. Rent, I know that it's expenses. And cash, I know that it's an assets. If I want to increase the expenses that I incurred, I will put it on the debit side. So I will put debit rent expenses and credit will be the cash. for whatever amount, 1,200 or 2,000. Example 4. You receive cash from customer on account. What does it mean? That you provide service or you give product to a customer and you book the invoice on account receivable, and after a month you get the cash from this customer. I know that the cash is current assets. So if I want to increase my cash balance in the journal entry, I will put it on the debit side. So I will put debit cash for 2,000. Okay, what will be the credit side? I know that before, when I provide the service or the product on account, I increase already the account receivable. So now I want to decrease the account receivable because I get the cash already. So on the credit side, I will put the account receivable for 2,000. The last example, you borrow money from the bank. Borrowing money from the bank, it means that I got cash. So I want to increase the cash account. I know that the cash is current assets, and if I want to increase the current assets, I will put it on the debit side. So I will put debit cash for 10,000. Credit, what will it be? It will be liability. It will be loans because I need to pay this loan back in the future. So in the credit side, I will put bank loan payable. Again, to review the table that we make, you need to remember, put on the debit side the assets and expenses. If you want to increase it in the journal entry, you will put it on the debit side. If you want to decrease it, you will put it on the credit side. And on the other table, on the credit, you have the liability, equity, and income. If you want to increase any account of these, you will put it on the credit side in the journal entry. And if you want to decrease it, you will put it on the debit side. By remembering this table, you will be able to book any journal entry. Thank you for watching.